Hooty hoo, all my stock market gamblers. Welcome today. I'm Tall Mike. So glad you're here. What do we got going on in the stock market? Well, the market's kind of flat today. Dow's up about 50, Nasdaq's down about 50. And this is kind of the calm day after we had those two big down days in a row this week. We're down 500 Monday, 400 on Tuesday. We've given back all of that Powell rally. Now, Powell came out and gave that speech last week, and the market jumped up 3% right out of the gate when he was giving the speech, but we've given all that back and a little more. You see, I thought that was a gift to the short sellers, and sure enough, the short sellers piled in, and we've given it all back. Now, are we going to get a bounce? Well, I think we still have farther to go lower, but yes, we will get a bounce. I mean, we're no longer overbought. We're almost getting down to the oversold part where we will get a bounce up. Nothing goes straight down, but yes, this market has more to the downside to go. Now, maybe if we get the SPY down to the 50-day moving average, we'll get a little bounce off of that, and they can call that the Christmas rally, the Santa Claus rally, if you will. But the market's going lower. The market's still trending downward. I don't think we're going to bottom out probably till January sometime. So that's my take on the market. Now, a lot of people, a lot of the big names expecting that Santa Claus rally, and maybe they'll get it. I'm just not betting on it. Yes, we're going to get a bounce. You see, we went like this in the Powell speech, and now we've come down. Now, we'll try to get a bounce back up, but I don't think we'll get as high as we did in the Powell speech. And that will confirm that we're going lower. If we can't get above that level of where he gave a speech, we will head lower. All right, let's move over to the real estate market. Now, the real estate market, a lot of news articles coming out. Black Knight put one out, and anyways, they estimate that there's basically 500,000 people right now underwater on their mortgages. Now, we talked about this in the last video. It's called negative equity. So 500,000 people that bought homes already have negative equity. But not to worry, Black Knight says, these are just the poor people. These are the people that put 3% down or 5% down. They came with FHA loans or VA loans and put a very low amount down. And that's why they're underwater. They're not really the smart people that put the 20% down. The rich people, if you will, the ones that have the money to put down a larger down payment. And these people, they still have about, 10% equity left if they put 20% down. So they're not in a negative equity position yet. And of course, it is true that 500,000 people with negative equity, 500,000 people are underwater right now. That number's nothing. That's nothing. Wait till it's 10 or 20 million people that get underwater. Then you're going to have a big problem because everybody's going to start giving the properties back to the banks. Now, there was another article came out. It was by Zillow. Now, the chief economist for Zillow, his name's Jeff Tucker, he says that home prices won't collapse. Home prices won't collapse. Well, that's interesting, Jeff. You haven't got anything right so far this year, but yes, you think home prices won't collapse. All right, well, that's fine and dandy. He says that buyer conditions, they're improving. They're improving, right? Because the properties are staying on the market twice as long now. And this is good for the buyers. He says that the only thing that's missing is relief in the mortgage market. As soon as we get a little bit of relief in the mortgage market, the buyers will come back flooding the market again. The buyers will jump back in. Now, I don't see it that way, but here's another article. All right, so the Mortgage Banker Association, they put out their estimates for mortgage rates. Now, they're saying that by the end of 2023, we're at the end of 2022 right now, by the end of 2023, mortgage rates will be below 5%. They're predicting that they're going to come down below 5% 1 year from now. That's what they're predicting. Now, they'd even go out farther. At the end of 2024, 2 years from now, they're going to be below 4%. Now, first of all, I can't predict what mortgages are going to be by the end of this year, which is ending in about 3 weeks. I have no clue where they'll be. But they know 2 years out that they're going to be below 4%. Now, why are they saying this? Well, first of all, let's figure out who they are. The Mortgage Banker Association, right? Well, what do they want? They want people to come and buy homes so that they can make money. They're mortgage bankers. So they're predicting, they're telling you, they're telegraphing mortgage rates 2 years into the future, below 4%. So go out and buy now, pay 7 or 8% for your mortgage, and then you can refinance it. That's what they're trying to tell you. Now, this, of course, is not my take on the market. Of course, it's not. My take is a year from now, we're going to be close to 10%, maybe even above 10%. Now, I see... Okay, here's my take on the housing market. Here's what I see. I see the housing market, well, it's going to be slowing down. It's coming to a grind. It's coming to a standstill. But here's my real take. It's going to become very illiquid. It's going to be much less liquid. Meaning, if you want to sell your house, it's going to take you between 6 months to a year to find some idiot to come in and buy it, right? It's going to take you that long. The marketplace is going to become illiquid. Now, why is it going to become illiquid? That just doesn't make any sense, Mike. We got this booming economy. We got people that have this demand to go out and buy houses. Well, it's going to become illiquid because, well, it's really the Federal Reserve's fault. Okay, now here's the thing. The Federal Reserve is about $3 trillion. $3 trillion worth of mortgages. Do you realize in the last 2 years, they bought one out of every three. 1 out of every 3 mortgages was bought by the Federal Reserve. Now, this market's going to start to unwind. You see, and I hope it unwinds a lot. I really do. You see, the reason is I'm a free market guy. I think markets should be free. But the Federal Reserve thinks they can micromanage every little thing, right? So they did all this printing of money, right? And they've held interest rates at 0 for the last 12 years. And they come out and they bought 1 out of every 3 mortgages. And they have $3 trillion of these on their balance sheet. Well, here's the thing. The Federal Reserve now has a problem. They got $9 trillion on their balance sheet. $3 trillion are basically, well, they're the mortgage-backed securities. The other $6 trillion would be the bonds that they buy, and they buy corporate debt too. For all of this stuff, when rates went from 3% up to, well, the rates have been going up. So what is the value of this $9 trillion done? It's gone down. Now they're down almost $2 trillion on a paper loss. So they don't really want to sell the bonds. They don't really want to sell the mortgage-backed securities because they would have to come to the government, the Treasury, and they'd have to say, hey, we have this big loss. We have a $1.8 trillion loss. Can you pay us back? Well, no, our government doesn't have any money. There's no $1.8 trillion sitting in the Treasury. What would we have to do? We'd have to sell more bonds. Well, who would we sell them to? Well, the Federal Reserve, they want to stop buying bonds. They say they're going to start to sell them. Now, I don't think they're going to actually do that. They say they are, but they're not going to do this. Their plan is to let the bonds just run off. When they expire, they're just not going to buy them again. All right. And so they had the same plan with mortgage-backed securities. They were just going to let them run off their books, right? Well, here's the thing. Okay, so they got all these people with this 3% loan. And normally people, well, they either sell the properties or they refi, and these would run off the Fed's balance sheet. But nobody's refiing right now. You want to go from 3 to 7? No, you don't. Nobody's buying right now. So, no, but they can't sell these properties. So basically, these aren't running off of their balance sheet. They're staying on their balance sheet. And they're going to be on their balance sheet for 30 years. These are 30-year mortgages that they got, right? Unless they can figure a way to get people to, sell their house and refinance and do all that stuff, they're not going to run off the balance sheet. So what's going to have to happen? Well, if they want to shore up their balance sheet, they're going to have to start selling mortgage-backed securities into the marketplace. Well, who's going to buy them? Are you going to buy them? I'm not going to buy them. Nobody's going to want to touch these. These are going to become like a toxic asset. Why? Because the equity is going to be going down. We already got 500,000 people underwater. 500,000, and we're going to get 10, 20 million people are going to be underwater as the equity starts to, to go down. And so these will be what is kind of like a toxic asset. They can't sell them. Okay, so they're going to have these on their balance sheet. Well, the Fed's become illiquid. That's why the housing market's going to be illiquid. There's going to be no mortgage money. There just isn't. Mortgage market is going to dry up. There's no money to loan people. There's no one that's going to make these loans. All right, so the mortgage money dries up. Now, the whole debt market, that's what really scares me. What if the debt market dries up? Look, there's this big bubble out there, and it's getting bigger and bigger and bigger. It's a huge bubble, but this bubble is now starting to pop. It's starting to pop, and this is going to be a very big problem. So for the housing market, I see a very illiquid market. I see it grinding down to a halt. It's already standing still right now. We're in the Christmas holidays. I get that. That's a slow time of year, but when we get to the selling season, it's not going to pick up. It's not going to accelerate. It's going to grind down to a halt. Now, I've been telling people about 50% off deals. I think the housing market's going to come down by 50%. Now, you can go talk to your realtor. They're going to tell you it's a great time to buy. You can go talk to that Zillow senior economist at Zillow, Jeff Tucker. He's going to tell you prices won't come down. There's not going to be a collapse. They're going to tell you all this because it's in their best interest to tell you this. Now, I say 50% collapse. Now, people say, Mike, that's impossible. You know what? I think it's going to be worse than that. I think it's going to be back like in Japan in the 1990s. Their real estate market, their residential market went down 85%. Now, it didn't do it overnight. It's just been a slow grind down. And maybe that's how this plays out. Yeah, maybe there won't be this dynamic crash, but when the house prices come down, they're not going to be going up this time. You're not going to see the prices that Billy Bob got for at least another decade. And that's 10 years. That's 10 years that people are going to be underwater. The 500,000 people that are underwater right now, they're going to be underwater for 5-10 years. Now, are they going to keep paying on their house? Maybe, maybe not. Maybe they just hand it back to the bank. Now, that's just 500,000 people, and that's handleable. That's manageable. What happens when that becomes 5, 10, 15 million people? Well, then we have a problem because they're just going to be handing this back to the bank because they're underwater. Do you want to keep paying on your house when you're underwater? You may be doing. Your area people do, right? Well, in your area, nobody could be underwater. Your area never goes down. But look, the real estate market is going down, and people are starting to get underwater. 500,000 right now. I say by this time next year, oh my goodness, 2023 is not going to be pretty. There is going to be a lot of layoffs out there. The recession's here. There could be as many as 5 or 10 million people underwater. Negative equity is the term you want to look. That's going to be the term of the day. Negative equity. Nobody wants negative equity. Why keep paying on your house? They're not going to. These houses are going to be dumped on the market as the equity starts to go lower and lower. Now, people will tell you I'm wrong, and I'm okay with that. This is just my take, and if you like my take, give me the thumbs up so I can tell you more about it. Look, it's Wednesday, everybody. Get out there. Have a great Wednesday. You really like it? Hit the subscribe button. I want to talk to you again later in the week. Bye-bye now.